Dan Celia.
I want to be a nation that is on the biblical principles and the values and the ethics that are found in Scripture.
Your personal economy.
Do you just watch it every day to make sure it doesn't go back down?
I don't ever recommend buying anything that is something that you're going to sit in front of the computer screen and watch every day.
Financial issues that you need to know.
And now the solution for economic growth in our economy is now spending more money and pay no never mind to the debt ceiling as if it's irrelevant.
We got to come together if we're going to do anything about this.
Aligning reality with truth.
If the people have the lack of understanding the truth. Truth is truth.
Well, I think it's time we ask ourselves if we still know the freedoms that were intended for us by the founding fathers.
Now, here's your host, Dan Celia.
Welcome back, Financial Issues. I'm Dan Celia. Welcome back to the second hour. Sure appreciate you all being here. All of you that are joining us for the second hour, sure appreciate that. Just to recap a little bit, some of the numbers that we have gotten today were the CPI number. That's going to indicate some of our inflation. The biggest number in that, the highest number in that, was food. Food jumped almost a half of 1% for the month of March. So that's a big jump compared to February. By the way, our year over year core inflation, not the headline number, core inflation. Core does not means that it does not include food and energy. I just got finished telling you one of the biggest jumps we had was in food, right? Doesn't include food and energy. 1.7%. That's the inflation rate. I don't know about you, but it feels like a lot more than that to me. And I'm sure it does to you as we continue to see food prices going up. So I think it's a lot more than that, but nevertheless, we have been fortunate that we haven't seen gasoline prices. Can you imagine what's going on with Russia and the Ukraine right now? Can you imagine if that were 5 years ago, what we'd be paying for gasoline right now? Maybe you can't, but it would look very, very different than it looks right now. And we are going to head into the right now, I think it starts now. It's today the 15th, right? So either today or maybe it's the end of the month, our summer gasoline prices are going to kick in. So we're going to pay a little bit more, as we always do. But nevertheless, we've been helped out a little bit. But here's the big number that came out today that I want to talk about. Wages down again. Wages down again. Think about this. Food inflate. Food alone up a half of 1%. Wages down. Core inflation without food and energy. Without food. So you can add on the 4/10 for food, 1.7%. Wages down. Wages, inflation adjusted wages, as low as they were in 1973. We continue to see wages going down. And we get a record number also out yesterday, record number of people on food stamps. As a matter of fact, there are now more people on food stamps than there are full-time women in the workforce. 44 million to 47 million. The voting bloc for the liberals, people on food stamps, is bigger than they believe the voting bloc of women. They believe, meaning they believe they own, this is the liberals, own most of the women vote. So, I mean, think about that. I thought we were in a recovery. So did I. Or I never thought that, but that's what they say. But we've got food inflation going up. We have lower wages. We have more people unemployed. We have less full-time workers than we've had in 35 years. We have the lowest labor participation rate in over 30 years. We've got lowest wages since 1973. We've got more people in poverty than we've ever had in our nation. Poverty rate continuing to go up. And we're in a recovery? Really? It's unbelievable. So anyway, that's the big number. That's where we are. And how the market's reacting. Surely they're in the tank. No, they're not. They're up. Why? Because we've had some company earnings that came out with pretty good numbers. Companies are making money. They're not hiring anybody. They're not expanding. They don't have more sales. They're not expanding. They're not spending. They're not investing in business. In other words, they're not expanding their plants. They're not buying more equipment. They're not doing anything, but their profits are going up. Good deal for them. So are we any better off in the economy? I'd say no. Are some of the companies better off? Absolutely. So don't tell me there's not inflation in other segments that are fairly dramatic when you see other industries going up bottom line. I know a lot of it is the manipulation of their balance sheet due to the cheap or free money that is out there. I get that. I understand that. And I've talked about that many times. But also, you got to look at a company reporting yesterday, Citigroup, one of the largest banks in the world, reporting, and their revenues aren't up. So they don't have more revenues, but their profits are up. Their earnings are up. Why? Because they got more things they're charging more fees on, and their fees continue to go up, and it's picking up the slack for the fact they have fewer depositors or business people using their bank. Anyway, that's where we are, 866-300-9298. Let me go back to the phones, 866-300-9298. Let me go to, who are we going to? Jackie from Arkansas. Hey, Jackie.
Hi, this is
How are
Jackie.
you?
Thank you for taking my call.
Sure thing.
It's a wonderful day today, April 15th. Yes, sirree.
Gotta love it.
But I don't this year. Usually
No.
we get a good tax return. I pay extra every year so that we don't have to have a problem. The only problem is that my husband's business went out of, my husband's factory went out of business, so he was out of work for about 2 years. Our house was in danger of foreclosure about 5 times, and so he decided last year to do a very good thing. He wanted to take out his IRA and cash it in so he could pay off the mortgage, which was wonderful. Don't you think that was wonderful?
Well, I don't know the circumstances behind it, but anyway, go ahead. So I won't say it's wonderful
The problem
yet.
is he didn't have them take out enough money. He only took out the 20%, and the people said, "Oh yeah, that'll be enough to take care of your taxes," and it's not. So today I get to pay the IRS $16,600.
Oh, brother.
Oh yes. So I'm at the tax lady, and she says we have to set up a payment plan, and now it's going to be $800 a month for 18 months. And this is the absolute only recourse I have. There's nothing else I can do.
There's nothing else you can do. Nothing else you can do. This is it.
My.
Yeah, I mean, it is the only recourse that you have, and not only that, but yes, they'll set up a payment plan for you, but that payment plan is going to has probably included some interest and penalties inside that payment plan. So you're actually, when it's all said and done, you should be paying actually more taxes than you owe. Not to mention that you mentioned that it's an 18-month payment plan. So it means this time next year, you could potentially be in the same boat with not getting any refunds, but again, paying taxes. Now, if you get a refund next year, that'll go towards this payment. They won't give you the refund. They'll automatically apply it to the payment CEO. So yeah, it has a potential of just getting worse on top of it.
What I would ask that you tell all these people, I mean, to be honest, he didn't even tell me he was doing this. And after I guess he filled out the paperwork in June or something. He told me in November that he had taken out his IRA and he was going to pay off the mortgage. But he spent all the extra money that there was. And my concern is, of course, we need marriage counseling because he won't talk to me about money. Why is it that men think that their money is theirs, but a woman's income belongs to the family? That is a big question, isn't it?
Well, I can't help you with that either. But you're right. I mean, it happens all the time. And look, we all have to be in a place where our money doesn't belong to either one of us. You know, so many times we tithe or we give from our money because we feel blessed by God to even have what we have. And we think we own the rest of it. And that's not the case. We're all called to be good stewards of what we have and what God has given us. So there's a whole lot more question even to that, Jackie, than that fact. But unfortunately, this is what we're hearing today. I estimate my taxes all year long so that I wouldn't have to write a check on the 15th of the month. And come to find out, because of some of the tax changes in what's acceptable for deductions and those kinds of things, that changing, I still had to pay. So now next year, my quarterly payments even going to be more. So, I mean, it goes on and on. And I just sent on Twitter to a reporter who was asking for solutions to the tax code. And I basically said there is only one solution, and that solution is a flat tax or a fair tax. I said a 17% fair tax, a flat tax, with a graduated scale up to 70% for those making under $40,000 a year, a 17% flat corporate tax rate, and problem solved. We have more money than we need coming into the economy, or coming into the government to pay its bills, and we can file our taxes on a postage stamp, and that's about it. So, yeah, huge issues that we continue to see, and the IRS is winning, and we don't have the guts in Washington to do anything about it. And by the way, folks, and thank you, Jackie, for your call. We don't have the guts in Washington to do anything about it. We don't. Listen, a simplified tax code, and I know Republicans have offers on the table right now. They have legislation on the table to do that. Never going to happen, because the Republicans, the Democrats alike, benefit dramatically in their campaign funds from the complexities of the tax code. Make no mistake about it. They need the complexities of the tax codes. The lobbyists are going to continue to lobby for keeping intact the complexities of the tax code. So they will tweak it and revise it and say they've changed the tax code. We don't need a tweaking. We don't need a revision of this part or that part. That's not what we need. We need it to all be gathered together and thrown in the trash. And we need to go to a fair tax or a flat tax system. And we need to do it immediately. And it would solve a ton of problems, including the problems of our spending in Washington. If we can do that and control spending, we'll be in great shape. Let me go to Patrice calling us from Arkansas. Hi, Patrice.
Hello. I just was wondering, I know that you support the Timothy funds, but what about Ave Maria funds or the Epiphany funds? Mm-hmm. Those are Catholic groups that also screen for pornography and abortion and that sort of thing. Have you ever looked into those?
I've looked into them, and in fact, they're not biblically responsible. It's the only reason I don't support them. And you can do it yourself. They have Citibank. It's one of their biggest holdings. Citibank is probably the number one supporter of abortion and pornography. Maybe not the number one, but way up there. Citibank's one of their holdings. Procter & Gamble's one of their holdings. They've got a number. So I don't know how they do their screening. And I'm not saying, obviously their screening process is different than mine or different from Timothy's, but there is still issues in those funds. So I have looked into them. There's a Eventide is another one who is, in fact, I would say that Eventide is biblically responsible in most of them. I don't know a lot about them other than that I've checked them out. So, I have checked those out and have looked. And here's the thing, folks. Anybody can do it. That from that level, because anybody can dig very on the surface and get their top 10 holdings of their funds. So it's not like you've got to even go beyond that. When you see it in the top 10 holdings, you can be reasonably certain that it's going to permeate through the rest of it. So I think it's just a question of how they do their screening. I've talked about this with the Southern Baptist Convention and their mutual fund. Same thing. They are not biblically responsible. As a matter of fact, they're not even claiming to be biblically responsible. So thanks for asking that question, Patrice. I hope that helps. I got to run. I'm right up against break. 866-300-9298. We'll be right back.
You get the soil ready.
You put the seeds in and then you water it.
How do you plant a garden?
I don't know. You pray that God will give you a good harvest. And you have to work it to get all the weeds away. And then God brings the plants.
Planting a garden takes planning, hard work, and God's blessing. So does creating a lasting legacy for the people and charities that mean the most to you. The AFA Foundation is here to help you sow the financial seeds God has blessed you with in order for them to blossom for generations to come. We do this by offering free consultation and assistance in the areas of charitable gift annuities, estate planning, will and trust planning, and bequests. To learn more, call 800-326-4543, extension 345. 800-326-4543, extension 345, or visit afafoundation.net.
The opening statement in the Constitution of the United States says this, that we, the people of the United States, in order to form a more perfect union, establish justice, ensure domestic tranquility, provide for the common defense, promote the general welfare, and secure the blessings of liberty. I don't know what part of that we don't get anymore. That was written by men who cared about this country deeply.
Financial Issues with Dan Celia.
Welcome back. You're listening to Financial Issues. I'm Dan Celia. 866-300-9298, 866-300-9298. If you want to weigh in, we've got a phone line open, 866-300-9298. Let me go to Tess. Tess calling us from Alabama. Hey, Tess.
Hello.
How are you?
Great. How are you?
Good.
Okay, my question today was 58 years old, and I've been doing the Roth IRA for the last couple of years, it's at Edward Jones, and it's been allotted like to the conservative columns. Do you think that's like a good investment?
Well, it's, I'm not sure what is, in their conservative allocation, it's called model. I'm not sure what that is made up of, but better, I will say this, Tess, it's better to be on the conservative side, in my opinion, than it would be to be on the aggressive side. Now, having said that, had you been in the aggressive side last year, you would have done better than you did on the conservative side. But at this point, I would still stay on the conservative side. Now, again, I don't know what makes it up. In other words, whether they're using bond mutual funds and what stocks they're using, all that. I don't know what makes it up. So I'm just speaking in terms of, I'm going to make an assumption that because it's called conservative, that it's a little bit safer than what they would call aggressive. So I'm just making that assumption. So I would say that
what he was saying was, by being in the conservative, it would average between 5 and 7% interest. And I didn't want to just leave it in the bank to where it's earning, 0 point whatever, not even a percentage.
Right. Well, I think you are right moving it from the bank because you're still young and you're contributing on a regular basis and you still have a number of years to which you can contribute. You're still working, I assume, and can still contribute. So I think you are right in doing that. And, you're right, I think, now in being on the conservative side. So I wouldn't change anything at this point.
All right. Thank you so much.
All right. Thanks, Tess. I appreciate it. 866-300-9298. You're listening to Financial Issues. I'm Dan Celia. Well, the market's dramatically off their highs. They were up considerable amount. The NASDAQ turned negative. It's now negative about 14. And the Dow and the S&P look like they're about to go negative. The Dow's only up 7 on its way down. It was up over 70. So a little bit of a change there. Let me go to Ted. Ted's calling us from Texas. Hey, Ted.
Good morning, Dan.
Good morning.
I have a question. Try to keep it simple. I'm in the process of losing my job in the next couple of months.
Okay.
I've been with a company for about 14 years, and I have about $500,000 in my retirement accounts.
Mm-hmm.
I'm curious what to do with those monies as I leave this job. I do not have a job currently yet, and so I'm guessing I'll roll those over into a different account. But do you have any advice as to what I should do, including a gift annuity? Is that a good option to consider?
How old are you,
I'm
Ted?
a doctor in the healthcare industry, and I don't know what my future looks like. I'm 54 years old.
Okay.
And
yeah.
So it's
Ted,
complex issues and questions ahead.
Yeah. Ted, I would obviously you're going to roll it over. You're going to get roll it over into an account that you have some control over. So you're going to roll over. You're going to open up an IRA account into a brokerage company. I'm okay with you doing it online or you can go to an investment advisor. But I would, if you do it online, I'd go to a TD Ameritrade or Charles Schwab or one of those. And I think that would make sense to, you obviously you want to gain some control over it to be able to make some decisions about the future of that account. I would say that right now, the charitable gift annuity, if you have other monies outside the qualified money, the retirement money, I think would be a great option in the sense that at least it can secure, it's like buying a bit of a pension in a sense that someday, whatever age you pick, 65, 68, 60, whatever it is, you can pick a date or a series of, a 10-year time period at which, every year you wait, your income would go up, but which you start receiving that permanent income. I would love to see you do some of it out of your retirement money, but I don't want you to take the 10% penalty. Unfortunately, the law does not allow you to roll over qualified money into a charitable gift annuity. So what happens is it ends up being a withdrawal for you, which is okay. I like it at 59 and a half because I believe that everybody should work after a certain age of getting out of those retirement funds and start shifting them gradually over into an investment account in case your heirs should ever get hold of that account. They're going to get clobbered in taxes. So, I think we should all wean out of those at some point in time. But I don't want to see it happen before 59 and a half. So if you did it now, you not only have to pay the tax on the money, you'd have to pay 10%. And I'd hate to see that happen. So the charitable gift annuity is a great idea if you have some other savings that you could use to do that. If not, I say at 59 and a half that you reconsider and take some of the money, a portion, not a significant portion, but a portion of it out of your retirement funds, move that over into the charitable gift annuity. For now, I would like to see you get control of the money, get it into an account where you can be right now, not necessarily very aggressive. You're still young. You're right. I mean, you have no idea what's in store in the healthcare industry. I think we're going to see a very rough time for healthcare workers, but I think it's going to be short-lived. That's me being very optimistic. And so far, all my optimism about what might happen with the healthcare system has not come to fruition. So, but I believe that when the quality of care issues begins to impact the vast majority of Americans, which I believe is going to be by 2016, forget all the cost. Forget the cost of out-of-pocket expenses and all that. That's a huge issue going to impact Americans. But when the quality of care issues begin to impact America, I think we're going to start seeing some change. And I think that then there will be a resurgence of people like you and others that start coming back into under some different conditions, but still be better. So, I think that there's a lot of uncertainty, but there's also a lot of uncertainty about the markets. You have managed to build a nice nest egg. It's great for, in the time that you've spent. So what I want to see you do is have kind of a preservation of principle mindset because of all the uncertainty in the markets right now in the economy. So I would get it out. I would roll it over. Once you've stopped contributing to it totally and you're gone, roll it over into an IRA account that you have control over in some way, shape, or form, whether it's with a financial advisor or whether it's in your own brokerage account, and you're following, my picks or my stuff on my website. But either way, get control over it and do that. So I think that's the right thing to do, to get control over it. So I don't know. I mean, hopefully that gives you a little, and don't be too anxious regardless of what happens in the markets, whether they continue to go up or they continue to go down. I wouldn't be jumping in right now. I'd like to see you preserve what you have. If you are in the markets, Ted, you had a good year last year. You had a good year the year before. Now is the perfect time to roll it, get super conservative. That means money market accounts. You earn nothing, but you're preserving all the gains you have. The only other thing I'd recommend to everybody listening, to you, Ted, if you haven't already done this, go to my website, financialissues.org. Right there on the front page, you'll see a little skinny banner right in the middle of the front page, and it says A Case for Income. I would click that, print it out, and read it, or read it online. Click on that and read that. It's a paper that I wrote based on some research that I did with a group in Cambridge, and I narrowed this research down that I think is going to be very helpful for people to change their mindset a little bit as they head into retirement. So I would suggest you read that. It might be helpful to you. Okay. Anything else, Ted? Does that help you?
That's more than I can digest right now. Thank you so much.
Yeah,
God bless you.
Thank you, Ted. I appreciate the call. 866-300-9298, 866-300-9298. Let me go to Madeline from Georgia.
Hi.
Hey, Madeline.
Thanks for taking my call. I appreciate it very much. Enjoy your show.
Thank
I
you.
have a question. I worked for Bank of America for 21 years and got rifted. And I've had sort of a bumpy ride since then as far as jobs. I'm 60 years old. When I left the bank back in 2000, stock was in really good shape. It was paying a nice dividend. And then, I fell in love with the company, I guess, and it's dropped precipitously. It's back up now, I think, to about $17 a share, and they're paying a 5% dividend. I own some in a 401k, and then I own some stock outright. I was lucky enough to get some options. Do you think I should go ahead and take a loss on some of that stock and reinvest it? I guess what I'm concerned about is some income-producing dividend stock, because I'm entering near retirement, and I'm very concerned about inflation and some of the things you're talking about.
What are you doing with the dividends now? What's happening with the dividends now?
I'm actually just having them pay me. I stopped reinvesting in the company a long time ago, and I have some stock that's at a $10 share basis from when I started working there. When I left, the stock was paying a great dividend. It was worth quite a bit of money, but I didn't get out of the market in time. So it's got a great franchise, but you've been talking about the banking sector, and I agree with you. I'm pretty conservative, but the economy's pretty weak. So I was curious whether I should just go ahead and hold on to it, or you think just get out of that, maybe half of it or all of it.
Yeah, I would not get out of it, all of it. I believe the banking sector is going to get clobbered. I think the banking sector could get clobbered dramatically in the next month if we truly implement, which I doubt that we will, some real sanctions on Putin. And that would include not allowing their banks to operate here in America and to stop the flow of credit and capital between our banks and Russia. That would dramatically impact the top 5, Bank of America being one of them, would dramatically impact the banking sector, and we would see a plunge in the market, and those banking stocks would get hit hard. Now, I don't think we have the guts or the concern to really do that, but that certainly is out there and is a possibility. I am not a bank stock person. In my 30-some years, I've never bought bank stocks because I've never believed in bank stocks. I believe that their management is clueless. They have no idea what they do for a living, how they make their money, and they can't. I've never seen a bank president, Diamond maybe one of the best, and he can't do it either. When you talk about some of the things that they ran into over in England with their issues. So I've got a real issue with that, and I've stayed away from them. I think there's some corruption in there, and it just bothers me. So I'm not a bank stock fan unless it's a preferred, and that's rare that I even have some preferreds, but I have, and I still do. And that's mostly Royal Bank of Scotland. But having said that, I don't think you should get out of all of it because is it in IRA, any of it, or is it all non-qualified money?
It's in, but I'd say about half is owned outright and half is in the 401k.
401k.
And I
so,
don't have any retirement. I don't have a defined benefit plan from them. So
Okay.
That's why I'm concerned about getting some cash flow since I'm 60. Hopefully I'll be working another 5 to 10 years, but who knows with the economy the way it is.
Yeah, I mean, I would keep about 25% of it. And I wouldn't keep more than that. The rest of it, I would look to reinvest, as you said, in some income producing kinds of things. But in all honesty, I wouldn't be doing it now, Madeline. I'd probably wait. But I wouldn't wait to sell. I think you're fine. I know you're going to take a hit. You're going to take some losses. We've seen, I don't know what it's been, and I'm guessing, but I got to believe that, if I'm not mistaken, in the last 12 months, maybe it was at $18 or $19 a share. So it hasn't been that high even at a good time. So I would sell, but I wouldn't be doing anything with the cash that you generate. I would hang on to it for another several months, and let's talk again and see about reinvesting it. I got to run. Financial Issues, 866-300-9298. We'll be right back. Hi, this is Dan Celia. It is difficult in these volatile times to think about how am I going to manage my money? Can I manage my money? Do I have to put my trust and faith in someone else and then expect them to be biblically responsible in their management strategies? I think all of you have had those questions and concerns. Well, I can put you at some ease and tell you that if you come alongside Financial Issues and partner with us for $85 a year, I will help you with all those things. We're going to give you stock picks every Monday. I'm going to put you on an alert system that'll tell you when to buy or sell or hold or give you comfort. You'll get asset allocation models, investment strategies. You'll have access to our conference call that we do every month with our partners, all for $85 a year. I guarantee it'll be the best investment you ever make. Go to financialissues.org, financialissues.org to support the ministry. I sure would appreciate it.
The opinions and recommendations expressed by Dan are his own and do not necessarily represent the opinions of this station or any of the show's sponsors.
Welcome back, Financial Issues. I'm Dan Celia, 866-300-9298 if you want to queue your call up. And we're going to get right back to the callers. Let's see, right now, as soon as I can get to the callers here. Here we go. Okay, so also let me just take a look at if we've gone. Now, it looks like everything's kind of holding its own right now, so not a lot of change as far as the markets go. Let me go to Mike. Mike calling us from Texas. Hey, Mike.
Good morning.
Good morning.
I just want to, my wife and I, Pat, listen to your program periodically, and we're partners for AFA, so we just really appreciate your ministry and all the other, all the other radio commentators that are on. But this morning, I'm 66, my wife is 61. About probably 65, 35, our resources are allocated into a pension plan that I can move and get to. I just left my company after 29.5 years, and then 35 in a 401k. So that's part one of the question is, how should we be allocating our funds either to go ahead and retire or be very, very close to retirement? And then the second part of the question is, we wanted to invest $6,500 today in an IRA, and we're thinking about the Israel Fund as a ministry / investment to allocate some funds.
Okay.
Right now.
Well, here's what I'd say to you, Mike. I have to ask you what your dependence on all of that money when you retire is going to be to supplement your income. Will you be drawing from it on a regular basis?
That would be likely, yes.
Okay.
We're trying to figure out. I work for a biotech company in Boston. The pension money is being controlled by them. I could start drawing on it now, depending, if I want to do that immediately, or I could move it somewhere else. So that's an option. And then the 401k money, we're just, in the decision-making process as to whether, what to put that into to be drawing on it in the future. And I have not gone on Social Security yet, but that's something I'm toying with. Ideally, I was looking for a job, but I haven't found one, and we've got family priorities that have taken precedent over me getting another job. So
okay,
we're just trying to decide what to do with the funds in the interim. And today we wanted to invest $6,500, possibly in an IRA with the Israel Fund.
So here's what I'll say to you. I mean, I like the Israel Fund for a piece of your investments. But I would say this to you, and I think the Israel Fund, and you're talking about the Timothy Plans Israel Fund, I think the Israel Fund is going to do well. I think Israel's economy is incredibly strong, getting stronger because of their natural gas. I believe, even they don't believe this, but I believe, or they haven't said this, but I believe in the next 3 years, they're going to be net exporters in a big way of natural gas, particularly in light of what's going on with Russia and their move to get more and more of their natural gas over to China as opposed to Europe. And I think that's going to be perfect scenario for Israel. And I think that that's going to be very good for the nation's economy. So I think in the next 4 to 5 years, you're going to start seeing a bump in the Israel Fund. But keep in mind, that's a long-term prospect. I would hope that it would be great this year. Who knows? Had a great year last year. But I wouldn't want you, I'm just telling you that because I wouldn't want you to do it with money that you can't leave sit for that period of time. So that's why I mentioned that. But I think it's a great fund. I think it's a great idea. I would like you to read my case for income on my website if you haven't done that yet, financialissues.org. Click on that and read it. I'd like you to print that out and read it because I think it's going to give you a lot of help in digesting some of your options. It'll give you a little bit of a different perspective and kind of where I'm coming from. So if you'd read that, I think that would help you. And you can just go to financialissues.org and click on it, and you can read it there or you can print it out. So I would do that. I would check with the pension. I would get their options, find out what your income options are for you on that, just so that you don't make a mistake and draw too soon because you didn't know that if you waited another year and a half, you might have gotten a considerable more or maybe even another 3 or 4 months. So make sure you find out what that looks like and what that's going to mean to you on the pension side. On the 401k side, I think you need, listen, I'm going to assume for a minute, Mike, that you had a pretty decent year last year in your 401k. I like to see you move that now, get it conservative, and then, and when I say conservative, I'm talking, short-term bond fund or, income, or money market account. Then let's talk about some utility funds, some high dividend producing energy stocks that are going to send a pretty decent annual yield to you to help supplement your income. But for right now, I would capture all the gain that you have in that by moving it into cash. And then maybe let's wait and see. I think the economy is going to continue to be volatile. The market's going to continue to be volatile for some time. And I don't feel comfortable, because you're so near retirement, I don't feel comfortable telling you to do anything with that money other than keep it very safe, capture what you have. Yes, you're not going to be earning anything, but you're not going to have risk of losing any that you have. And then we can start talking about changing it. Does that make sense?
That makes sense.
Okay, and I think that'd be a great plan for you. And again, give that Israel fund some thought to just know that it's you got to keep it in there for a while, which sounds like that's what you want to do.
Okay, thank you very much, Dan.
You're welcome. I appreciate the call. Let me go to Wendy. Wendy's calling us from Texas. Hey, Wendy.
Hi, Dan. Thank you for taking my call.
Sure thing.
I have what I think might be a simple question, and I'll ask it, and then you can ask for any details that you need.
Okay.
My husband and I were young while we're in our early 30s, and I was calling to find out, we have a car loan, and if we were to pay it off, we have enough in savings to pay it off, but we'd only be left with $4,000 in savings. Mm-hmm. Our only other debt is a credit card we pay off monthly, and then our monthly mortgage. And so I was calling to find out what you think about going ahead and paying it off, or should we just try to put some extra money towards it, or what do you think?
How much time do you have to pay before it is paid off?
Well, it's a 3-year car loan.
It's a 3-year car loan. Okay.
Uh-huh.
So is it? Do you own a home? Do you have children?
Yes, we actually have a toddler and one on the way.
Okay. I don't know. I mean, I'm a little concerned. I would say to you this: how secure do you feel under almost all economic conditions about keeping your husband keeping his job and your job, if you will?
Well, I stay home, but
okay.
We're self-employed, and we have somewhat of a steady income. But I mean, I guess nothing's ever guaranteed, I guess.
Right. Well, I get a little concerned about depleting your emergency savings. Okay. I would say this to you. I mean, I think I would pray about it. I'm okay doing it I guess as long as you feel that you can be sold out, committed to whatever you're paying to your car payment, to getting into your savings, the vast majority of it into your savings, to replenish that and continue to build that up. I don't like to see, under your circumstances, we don't need a transmission blowing up in a car or something going wrong in the house that you've got to fix. I don't want you to have to get into debt to fix. So,
right.
That's the key. That's what emergency savings is for. It helps keep you out of debt. And it sounds like you guys have done a great job. You have very little debt. And I think that's great. So if the car payment is not a burden to you right now, you always have the money there to pay it off. It's not going anywhere in your emergency savings. But if the car payment is not a burden, I would probably, might be better to keep paying on it. I'm okay. If you paid it off, it wouldn't be the end of the world for me, but I would, I'd say if it's not a burden and you can keep doing it and keep intact your emergency savings, that would probably help me sleep better at night if I were you.
Okay.
Okay. So I know it's not real definitive, but I would just tell you to pray about it and think that way through it.
Okay. Well, thank you so much. You really have helped. So.
Oh, good. Thank you, Wendy. I appreciate it. Thank you for your call, and best of luck to you with your new baby on the way. Let me go to Susan in Virginia. Hey, Susan.
Hi, Dan. I just had a quick question for you.
Okay.
I have a discount brokerage account at Wells Fargo. I also have my checking savings account there as well as my 401k. In the event of anything, if anything happens to banks, is it wise or safe to have a brokerage account there?
Well, that's a great question, Susan. And I don't hardly ever talk about that, and I'm glad you asked. So here's the thing. Your brokerage account if Wells Fargo were to go bankrupt, your everything in your brokerage account should stay intact as long as it is not a Wells Fargo product. So if you own ExxonMobil stock in your Wells Fargo account, you're not going to lose any money. Now, the owner, you're going to have to be trading that under a different platform and maybe a little messy for a while. But if you own a Wells Fargo mutual fund and Wells Fargo goes bankrupt, or their brokerage side of it goes bankrupt, then yes, you could be in trouble. So remember that when you have an account like you have, the accounts like you have, what's important is what's in them. So a Wells Fargo brokerage account, just like a Charles Schwab brokerage account, is safe from a standpoint that it's all about what you have in it. If you have a Schwab account and you have Schwab mutual funds, probably not a good idea to have a lot. But it's only the trading platform, and it's what you use to keep your stock or mutual fund in what is called street name. It's you don't really own their certificates, but it's at this brokerage account, which is perfectly safe. But you should be okay because your eggs aren't really in one basket, even though it feels like it, because it's depending on what it's invested in. Does that make sense?
Yeah, that makes a lot of sense.
Okay. So I would say that if you have Wells Fargo mutual funds, or then you ought to think about changing that. But other than that, you're probably okay.
Right. No, I don't, and I didn't want to go through the hassle of changing it all if you thought it was okay to keep it like that. So.
Yeah, it may be a little messy if something ever happened, but your money would be safe.
Yeah. Okay. Great. All right. Thank you so much, man. I appreciate it.
You're welcome. Great question. Thank you, Susan. I appreciate it. 866-300. I don't know if we have time to get to another call. Let me go to Amy in Virginia. Hey, Amy.
Yes, Dan?
Yes.
Yes, you've often recommend the Timothy Fund.
Yes.
And I've listened, and I've never heard you speak about the fees associated with that. And I just wonder if you might explain those and how they're taken in return. And I'll hang up and listen.
Okay, great question. I have talked about it. Here's the thing about Timothy Fund that everybody should be aware of, because it's very, very important. Their fees probably on average from an average mutual fund are higher. Now, every mutual fund has fees associated with it in some way, shape, or form. Some are lower, some are higher. Does it impact the return? It absolutely does. Because remember, if a mutual fund company without the fees earns 10%, they gain 10%, then the fees come off the top of that, so they may only earn 9% or 8% or so on and so forth. So the fees are important. Timothy Funds fees are higher than the average, I would say. I don't know that for a fact, but I believe they are, primarily for one reason. Timothy Funds might have $1 billion in their mutual funds after 25 years. Other mutual funds might have $40 billion. So the fees of most mutual funds are spread out among a much larger number. Timothy Funds fees will continue to come down as they get a bigger pool of money to spread those fees across. But that would be one of the reasons why their fees are higher. I go back, and I explain this in detail in my town hall meetings. I go back to the idea that we should not be so caught up in our first number one priority is being biblically responsible. Am I that concerned that I'm getting 25% instead of 30%? We shouldn't be. Now, if Timothy, with their high fees, did 30%, like every other mutual fund last year, even with those high fees. But nevertheless, it is an issue, But I would say that being biblically responsible should far outweigh any of, for a half of 1% or whatever it might be, higher than someplace else we might be. Great question, Amy. Thank you for that. I'm sorry I got to run. Folks, I want to thank all of you for being with us. Remember, all that we have is His. Let's stand before Him someday and be found a good and faithful steward. Have a great day. God bless.
If we ever forget that we're one nation under God, then we will be a nation gone under.